going on, guys? Welcome back to the Rollup TV. Today we have 5 awesome guests, starting off with Jake from Wintermute, trader. Wintermute's been getting a lot of shit lately for polyhedra and just blaming them for any sort of token dump. So have some fun on that one. We got Reagan from Lattice Fund, RJ from Aligned, Sid from Maple, and Bobby from Dupe, which is going to be an interesting one as well. So fun segments today. Welcome back to the Rollup TV, your premiere show, live from New York City. Right now, 3 times a week, coming to you live next week at Permissionless as well. The good stuff happens live. Thanks for being here. We're changing up the format a bit today and kind of going into a bit of a new format with some of the beginning of the show. So actually, what we're going to do today is react to some meme tweets from the clip that went viral on Twitter from the Monday show, I believe. And that should be fun. And then we got some By the Numbers segment. We have 5 guests. We have some news coming in between. And yeah, we've just been actively working on bringing different types of entertaining formats. So kind of looping in our first debate next Monday on collabs with 2 smart minds. That'll be cool. And then bringing in some other kind of like countdown formats. And I'm trying to get sound effects amongst other things. So yeah, excited to kind of just see where we can take this from a iteration perspective. Again, it's just me today. Rob will be back next week. Thankfully, I've been on the grind solo here, but why don't we get right into it and roll out some of the meme tweets, and let's do it. So the first tweet is from Ian Norden, and it was a comment on the host from Monday's clip. And basically, what happened here? Actually, I think the first one's going to be from Disruption Joe, but we can just look at all the meme tweets here in this thread. So, Disruption Joe .eth 𝘠𝘪𝘴 says, "Why would you post this? It clearly shows you don't know how rollups work. Kind weird, considering your name." Yeah, Disruption Joe. I mean, I think somebody told you to watch the whole clip, but what's funny is that this is actually a guy arguing against the way that rollups work, and us putting it out there as a response to the way that we know rollups work. And Disruption Joe .eth is not happy. So, Disruption Joe, I hope you got your fix there. And you know, I think it's a funny tweet. We can actually click on some of these other ones in here as well. There's quite a few good ones just within this thread even. There's another really good one. I think this next one is my favorite one from Ian Norden. Ian's tweet was hilarious. Kind of along the same lines of Joe, actually. Why was a podcast called The Rollup not able or willing to push back against an incorrect understanding about how finality works in rollups? And why is that podcast now spreading that incorrect understanding on Twitter? Ian, man. Ian, this did numbers. 47 likes, man. You ratioed us right there. So let me give you the reasoning here, Ian. Once again, the original question was around bottleneck between execution and consensus. And Jonah was commenting on what was misconstrued as the optimistic finality of a 7-day fraud period with the actual inclusion of a transaction. And we posted this specifically because we wanted to provide what was considered to be a view of why L1s, namely Solana in Jonah's case that he mentioned, why he thought that they were better suited for clubs. But Ian, you know, I feel your pain, man. Why was a podcast called The Rollup not able to push back against an incorrect understanding about how finality works in rollups? You know, you raise a good point, Ian. Thank you for your consideration here. One more meme tweet that I thought was pretty funny was from old Fitty, who I've actually met this guy in person in St. Moritz, I believe. We hung out If you could just scroll up a bit, I think I already copy pasted it, but all of these are pretty funny. Yeah, yeah, keep going up a bit more. Here we go, here we go. Dude, why even bother? This is an investor being interviewed by a podcaster who oh, little technical difficulties here. Um, Dude, why even bother? This is an investor being interviewed by a podcast. Okay, so first of all, Fiddy, I claimed that clubs were new because we didn't have the infrastructure stack to actually support them in crypto until recently, which is true. That's why you're building on and using Starcoin technology. Second, there's nothing wrong with this world. This is a rage bait tweet that apparently upset people because this small nuance was missed here. So, Fiddy, you know, I know we're friends, man. I don't take it too seriously, but I thought this was pretty funny. All right. So, all right, guys, that's all the mean tweets that we have for today. That thread was funny. We take the responsibility of prioritizing consistent, congruent education, but also like to have fun with this new format. We're having a lot more fun and doing more entertainment style. And yeah, we hope that you guys enjoy. Into the next segment for today's show is by the numbers. So we have some interesting uh, stablecoin news here that I would like to bring up. Um, and so when you look at the numbers here, we'll pull it up. So Coinbase was up 14% and Circle up 20% after the Genius Bill passed. That was yesterday. I believe today is a holiday. Happy Juneteenth. Um, and so there's no open markets today. But yesterday we had Circle with a surge, Coinbase with a huge surge. I put out a tweet saying that people weren't ready for this, and that kind of we underestimated how much people wanted stablecoin exposure. I think that was clear in this, and so um, when I'm looking at by the numbers here, I'm seeing that it's very clear that stable coins are here to stay. These market caps are massive, uh, and Coin and Circle are surging and continue, I think, to do so. And I think I'd like to pull up the next post about by the numbers as well, get a bit more specific on what's actually happening on chain with stable coins. And that is actually from Delphi Digital, our friends there, who have put out a post around the numbers about stablecoin market cap, and what that means for the space. So let's just get that pulled up here in a sec. I believe that the big number was actually 250 billion in market cap. So stablecoins have just recently passed $250 billion in market cap. Yield-bearing stablecoins are growing fast. Athena has grown to nearly $6 billion since launch. Um, Tether and Circle still dominate. I'm going to put out a revenue meta tier list. But if you look at this chart here, I mean, it's insane. It's just a complete up only chart of stablecoin supply. Everyone that I speak to in the space is expecting a 10 to 15x in stablecoin supply within by the end of the decade, or within 18 months to 2 years. So look, I wouldn't be surprised to see this in a trillion by the end of next year, a 4x from here, as the space really heats up with regards to stablecoins. So look, I think that if we're looking at this from by the numbers purely, this is one of the best looking charts in as far as all metrics go in crypto. There really isn't much better than this. And so my takeaway here is Circle is probably what all of TradFi is going to do to participate in the stablecoin game, in the stablecoin race. And I expect them to basically be bidding Circle heavily. I was wrong on a couple of streams ago. I was like, I think Circle was at 90. I was like, look, I don't really want to own it here because I own coin already. I was wrong completely. It's at 190 now, pushing over 215 after hours. I think that's the only way right now to get public market exposure to stablecoins. And I mean, clearly, if you look by the numbers here with Delphi, our friends at Delphi, I mean, it's very clear that Tether and Circle are dominant. So, guys, that is the by the numbers segment of today's session. Looking forward to having our first guest on, which is Jake from Wintermute. Should be a good session. He'll be joining us here shortly. Jake and Wintermute have been under the brunt of actually being kind of in the fire a bit from a lot of people in the space. So yeah, looking forward to seeing what his takes are on the current market sentiment, the dynamics, and more when we get him up here. So should just be a second or two. He's been a trader at Wintermute. If you look at some of his recent content, he's been focusing a lot on obviously the Middle East. He did a recent stream talking about kind of like options and that type of work, and yeah, obviously stablecoin season and more. So looking forward to getting him up. And yeah, guys, no harm, no foul in the mean tweets. It's always fun to kind of joke around with some of the people that take the timeline seriously. So I'm a pretty joking type of guy. Hope you guys can understand that. And yeah. So topics of coverage for Jake is going to be option strategies, kind of where the market's at, so some of the macro environment, institutional rotation, kind of where Wintermute is at, some of the stuff from Neil and more. So we're gonna get Jake up here in a sec, and we'll be live. Jake, man, how are you? Good to have you on.
Hey, yeah, good to have you. Well, good to have me. Sorry.
Yeah, man.
Good to be here. Good to be here. Thanks for having me on.
The stock market's closed today, isn't it?
It is, yeah, it is. It's closed, but it always feels like this something on edge could happen, especially at the moment. So everyone's sort of working away here.
Yeah, it does feel like we're at a bit of like a decision point in the markets, right? I mean, I think a slow summer has been what a lot of people have been expecting, or at least can think about as of the last couple of years. Like, okay, summers people sign off, but it does feel like BTC and the broader market it is at quite a point of kind of like compression, consolidation, and I'm sure you're seeing some of the option stuff kind of get tightened up as well. Yeah, well, what's your thoughts here on the next couple weeks into the end of Q2 and into Q3?
Yeah, I think we'd sort of come out of a bit of a weird environment whereby we were obviously being driven by a sort of post-Liberation Day dump lower, and then it was almost like fairly mechanical, then back up into retesting all-time highs. And we sort of got there, we tried to break through, and I guess like it never really followed through. And I think the market at the moment is waiting for a little bit of a new catalyst. We obviously then had sort of tensions again with sort of Israel and Iran coming to the forefront, and that is obviously leaning on trad. Obviously oil spiked, but I mean, these things, the geopolitical side of things, like no one really has an edge there in all honesty. Like it's a tape driven environment, which ultimately since Trump's taken office, since the inauguration, really it has been very headline driven. So I guess that's sort of what we're seeing at the moment. It's a surprise how much the sort of Bitcoin vols have come off. But then if you put into the context sort of where all these corporate treasuries have been leaning into the market and sort of being that marginal buyer, and then obviously look selling vols on that treasury to generate and make it productive. So there's sort of this weird dislocation sort of between the spot action and what we're seeing in vol. And at the moment, sort of people have been leaning definitely at the shorter end into the hedging. So people have been hedging spot books, but ultimately that's what the options markets are for, right? Like people are looking at the skew at the moment thinking, yeah, it looks a bit soft, but what it does allow people to do is have a spot book and hedge that downside, because obviously if we do take the highs, people are looking for a big move, but equally, like if you get caught rolling over here, people would feel sort of I guess retrospectively like they should have put hedges on. So I think we're seeing a lot of that at the moment.
Yeah, man. You know what's on the option side is I saw a post with regards to adoption of perps in traditional finance, right? Now that Coinbase has okayed perps in the States. And I think that the tweet was from Moon Overlord, and he said, look, man, if perps are available in the States, then options are going to completely lose the majority of their volume, and they're basically cooked. What's your take on that? Are options traders in TradFi going to move to perps because they're a better product, or are these two separate groups of speculators on chain or off chain in this sense?
Yeah, I think you definitely have to. There's very, very, very different use cases for these products, right? Like the argument that's made in crypto as to the reason why options hasn't taken up way more of the open interest that perps offer is people often lean into, okay, you get the same sort of convex payoff if you just put margin in an account, whether that's on a SEX or now obviously more so a DEX, and you can obviously just treat that as an option with a linear payoff. But where it really sort of kicks in and where the options markets are used a lot is where you go, okay, well, something could happen. I still want to stay long. I want the tails covered, whether that's the left or right tail, and you can just pay the premium and you can sleep at night. A perp doesn't really give you that, because if you're then having to hedge, then ultimately you're taking yourself from long to arguably delta neutral if you hedge with a perp. So yeah, it takes the risk off the table if you 100% know what's going to happen tomorrow. But outside of that, you don't really have any idea. And I mean, options are used for so many different things. Like in traditional markets, it's very, very more, it's seriously more mature. Like in crypto, people just see them, or have done until arguably this year, as like a pure speculative tool. Whereas in trad, they're used more to hedge an underlying book. You've got a risk manager, and if you're on the buy side, that's constantly saying, where's your risk? What's covering your risk? What happens if this happens? And as long as you can point to some protection, whether that's from an offsetting position somewhere, or even better, if you've got some sort of vol product on the downside that you're protected, then you can at least say you've done your job. And I just think they're very, very different use cases, in all honesty. So I wouldn't say I sort of fully agree with that.
Yeah. Yeah, I just think a lot of what this like the out of the money 0-day options traders would do is what like a similar crowd to somebody who would trade like 50x on perps, similar crowd.
Yeah, I think that's probably, yeah. I mean, like there is a use case for 0DTE, and that's why I think since they've been rolled out in the S&P, for example, they have taken a huge amount of volume. There's been numerous studies that have shown that, yes, okay, on face value, everyone was looking at that saying it's changing the structure of the market, but and it's allowing a lot of retail to come in and punt. But there are institutions that do use these products to hedge, and I think you have seen a bit of a shift in the vol surface around key events. And we're talking obviously trad markets here, but it allows people to say, okay, for example, last night, instead of buying a month end contracts, obviously in the S&P, they're way more frequent anyway, but like hypothetically, it means you can just hedge your risk on that day around the event, and you do see a little bit of that. Or even at the moment, obviously you've got some of those fronts elevated because of these tensions, and it does allow you to hedge a book a little bit better. But ultimately, that's what I mean. Options are insurance contracts, right? That's sort of the very nature of them.
Yeah. Working at Wintermute must be pretty interesting. As of recent, you guys have bared the brunt of some of the crypto Twitter shenanigans with regards to polyhedra and some of these others. And I forget exactly who it was on your team, but they put out a meme that was like a guy riding on his bike, and then it was like, my girlfriend dumped me, and then he fell over, and it was like fucking Wintermute. What is it like being a target of just like consistent let's just say FUD in the space?
To be honest, a lot of us, we don't really, no one really is super active on Twitter. Like, I mean, I try and sort of get on there occasionally, but I very rarely would sort of look too deep into what's going on. I think there's a huge amount of sort of misconceptions about not just us, right? Like, again, about the industry as a whole. And I think a lot of the time it's just not really worth engaging. I think people have tried in the past, but ultimately, look, like we know we're sort of operating within the confines of like what you would expect someone to be doing in a traditional finance environment in a highly regulated sort of industry. So we know that sort of our sort of morals are clear with it. So
Yeah.
it's, yeah, and people see one side of a trade, and a lot of the time, like, things get spun out of control. And obviously we all know that Twitter or X is an echo chamber. So
Of
yeah,
course.
don't really have too much to say on it.
So when you're looking at trading, within the strategies, etc., are you mostly doing your options and kind of trading stuff on chain or off chain? Like, where are the best venues that you found to kind of execute some of these theses, whether on chain or off chain?
So I guess we're one of the largest, if not the largest, liquidity provider on sort of most centralized and arguably most decentralized exchanges as well. We'll be on a venue if the counterparty risk is thought to be solid enough for us to have capital tied up there. And then obviously within the confines of what we can do, what we, I guess, withdrawals, deposits, all of this sort of stuff comes into play. What the sort of UI is like, how we can plug in, obviously via APIs, what's the settlement flow, all of this stuff feeds into the decisions. But we are obviously very, very active. We're doing obviously bulk of the volume on a lot of these sort of big tier 1, tier 2 exchanges, and that's both on sort of the SEX and decentralized as well.
Yeah. What's your take on some of the actual on-chain options protocols, like Derive? Premia has their new launch, 𝘗𝘗𝘏, and there's a couple others. Are there any on-chain options protocols that you find interesting? Generally, is a category of DeFi that will take off more than it currently has? Yep, I can hear you. Yeah. I mean, they've kind of struggled to. Just give us one sec here, Jake. I think we're having a little bit of audio stuff. Yes. Give us a sec here, guys. We're just gonna check the audio. Just give us one sec. Jake's gonna rejoin. Yeah, I didn't think that they would trade too much on-chain options. There's just not enough liquidity yet, so it wasn't a big surprise there. Um, but just couple last ones left for Jake, and we'll move on here. All right. Um, yeah. So, Jake, I mean, I think people who are looking at Wintermute's success and just like the success of the space, it can feel daunting, right? And like it can feel like it's hard to get off the ground and start. Hasib recently put out a pretty good tweet saying that there's a famous line from um, Mark Andreessen when he moved to Silicon Valley in 1994, saying that the internet boom was already underway. He felt like he was too late. And Hasib, he felt the same way when he got into crypto VC in 2018. It says like, was there really more space for another crypto VC? And then wrote around Bitcoin being 1/10 of gold, less than 1% of the world is on chain. You're still not late. However, with that being said, Bitcoin's at 100K. The total crypto market cap is hovering around 3 trillion. You know, um, where do you think we are in the life cycle of this asset class? And how reasonably early do you think this, like, the maturity of crypto as a whole is? Like, is Hasib right, or is he just kind of playing along the lines of you're still early, kumbaya?
I think, I guess, without sort of reverberating like exactly what he said, I really shared that because I think it was the best overview of sort of my feelings personally. And I mean, I wouldn't have sort of jumped straight ship from traditional finance to join a fully crypto native firm if I didn't believe in the industry. And I do think we're still early. And I think, just to reiterate some things that he said, like, there's no regulation yet. It's coming around. It's forming itself now. We are at the forefront of what's happening. We see a huge amount of institutions coming into the space, and not just sort of the crypto native firms now. You're talking like big names that are involved. We've got corporates that are adding it to the balance sheet. We've got sovereign nations, and even the fact we're discussing people like the US adding this stuff to sovereign like structures is just a far cry from where we thought we'd be when, I guess, 4 years ago or post FTX, in that world where we thought, okay, the industry's done, no one's going to ever trust any of the actors in this space again. And we've now built a really solid institutional framework that looks like prime brokers, custodians, LPs, like funds, all interacting in this purely sort of almost regulated kind of framework that we've just come so far. And I think, yeah, ultimately we're just getting off the ground, and we're starting to see, I mean, look at sort of the stablecoin space at the moment. And that's arguably the first sort of real product market fit that Trad has picked up and ran with outside of Bitcoin. And I think it just shows there are rails that are going to exist in the wider world, and all of that is being built and is trading at the moment. Arguably, a lot of it, we just don't know who the sort of big winners are going to be.
Yeah, I think we need to also have a deeper look at as far as like all of this is happening in terms of like the most bullish backdrop, right? Stable coins, where we're at, these treasury vehicles, all the things that you mentioned, and then simultaneously within the sphere of crypto, it also feels like people are a bit more apathetic than they, the performances of a lot of tokens is not where it's like, not what people expect. I think a lot of people are let down. I think there's an abundance of tokens. We need a bit more, cleaner, looser monetary policy. And also, I think just like we need to figure out like, okay, the technology is good, but like there's just literally zero, like almost zero demand for some of these tokens. And so like there's just big disconnect happening still. And I'm not sure what the resolution is going to be outside of just somewhat of this power law playing out with regards to asset bifurcation and just dispersion of actual results and performance. So,
yeah, no, I definitely agree with that. Obviously, I think if you look at like weekly sort of linear unlocks that hit the market, I mean, I think next week we have like 800 million, and then it sort of tails off. But even on like a slow week at the moment, you've got between sort of 400 and 600 million that's hitting the market. So yeah, you're right. We have to churn through that, and it's not going to be immediate, but ultimately it does present some really interesting opportunities for people with a really strong view, because ultimately at the end of the day, these protocols are still going to be the same when the tokenomics do shift to not so inflationary. And for those people who are willing to sit through that, I think that's where people are finding a lot of alpha and interest. Yeah.
Yep. Jake, I appreciate your time coming on and sharing. Look forward to the next couple months in the space broadly, and checking more and more of your work. Hope you have a good summer in the trenches, and that the end of the year treats us well. We can run it back sometime around then and see what's changed.
Awesome. Yeah. Thanks for having me on.
Thanks, Jake. See you soon.
Take care. Bye-bye.
Alrighty. Gotta love the options market, even though it's something that I think a lot of us probably don't spend that much time on. It's something that some of the most intelligent and just brightest minds in the space do. Okay, we're going to dive into a pressing concern here from yesterday, which is the A16Z Twitter account was hacked. This is not great for the program. Just wasn't really aware that this was even happening until I saw it on my feed today. Don't need to cover it for too long. Just wanted to present it to you guys because I thought it was pressing. A16Z Twitter account being hacked, not great for Twitter. And also I saw actually a friend who's a VC was used as a deep fake in a Zoom call recently, and that did not turn out well. So not a huge fan of these types of developments. But I just wanted to bring this to your attention, guys. Make a call for OPSEC that, guys, you really can't be careful enough. And I think it's very important to stay vigilant. So, all right, guys, up next we have Reagan Bozeman, one of the co-founders of Lattice Capital. Got some questions for him about startups, Circle, VCs, what he's seeing, and more. So a fellow Pudgy Penguin decided to bring him up, get him into the background, get him onto the stage, and get going. So give us 1 sec, and we'll get that rolling here. But yeah, guys, just one last call. Be vigilant. Do not do Zoom calls. Use 2FA, and do not use the YubiKeys, 2FA, everything that you possibly can when it comes to your accounts. Please, please, please. So, all right, guys. I think Reagan is in the backdrop, ready to join us today. Let's get him up here. Reagan, welcome to the show, man.
Yeah, thanks for having me on.
A fellow Pudgy Penguin. I don't know how long you've had that penguin, but I think I've had mine for nearly 3 years now.
I've had it for a long time, and then I bought my wife one. This is probably when it was like maybe 1 or 1.5 ETH. She didn't want it, so I sold it for maybe 4. And then I feel like even trying to explain the like mechanics, it's like, okay, well, like you should have held the NFT because like there's this other token and you would have got, it's like it's kind of like hard to explain. But no, what Lucas and that team has done is like it's very impressive. It's really hard to argue with.
He's pushing that idea of social currency now rather than like meme coin, right? More about like this like social currency idea. What's your thoughts there? Like, is that kind of hocus pocus, or is that the real deal?
I definitely don't want to call anything he's doing hocus pocus. So I don't
either.
I mean, it's like a decent rebrand. It sounds better, I think, than meme coins. Yeah. But I think it's like what they did is a good lesson that like IP is like a grind, right? Like they had a cute thing. They've made toys. They've gotten into stores. The blockchain is still like very early. And most of the other like NFT things, right? Like either the IP itself wasn't great, right? Like, can you imagine like a plush toy of a Bored Ape? It'd be like a little kid would cry if they saw that, right? It's like, it's horrifying visually. Or like, it's just a grind, right? They've been working at that for a long time.
It is a grind. I mean, yeah, them and Azuki have been the only ones who have kind of, I guess Apes a bit, but, the two teams that really kind of took that IP path and tried to go out and basically open up a top of funnel in a non-financialized way for, crypto brands. So, yeah, I think everybody should support that more broadly in the space. And, I think that social currency could work with the right implementations, but if you can build a community that actually uses it for some sort of, in games, in chats, etc. But anyway, Reagan, you have a ton of good content, and I've been following some of your work, as well as just have general questions for you. Obviously, yesterday, Circle was the talk of the town, pumped up to like 210, 215. And that was one of the largest, I think, the largest crypto IPO now in terms of just hype, performance, and coming on to market, other than basically Coinbase and Galaxy. We probably see more and more. In addition to that, we saw Stripe by Privy, and some other large acquisitions in the space by Stripe with Bridge, as well as other companies. You put out a tweet saying 8 months ago there had been zero $1 billion acquisitions in crypto. There have been 3 since. Circle has just IPO'd. So my thought to you is, and I keep tweeting this, guys, this is a sign of mania, this is a sign of mania, but $3 billion crypto acquisitions have just happened. Is this like a dot-com boom-esque, crypto's version of that, or is this just the warm-up here?
I think it's the warm-up, and I mean, I think it's like the opposite of mania, right? It's almost like the markets have been too subdued relative to where these companies have been. I mean, the fact that like the most profitable company on earth per employee, Tether, is a crypto business, a wild amount of like just such a wildly efficient business, and like no businesses have wanted to buy crypto businesses. I think it's a sign that like the market just slept on the industry for a long time. And part of it was regulatory, right? Like an M&A process, especially from a large acquirer, they tend to either be public companies or regulated to some extent. You had none of it. And so I don't know if it's a sign of mania. I think it's just a sign of companies waking up to the opportunity. So I think it's really exciting partially because I feel like so many teams, like Privy, which is a portfolio company of ours, has spent years building real businesses, generating real revenue, and maybe taken the hard option of like not even going down the token path.
Yeah.
But like very few of those teams had really been rewarded from a monetary perspective. And now I think a lot more of those businesses will be funded, which is just great for the space.
Yeah. Yeah. So you think that there will be more of these large acquisitions then coming soon?
100%. I mean, I think the 2 buckets of acquirers where you haven't seen anything yet, one is just like software companies, right? Amazon, Google, they have businesses that are relatively analogous to something like what Alchemy does. And there's been very little M&A there. And then banks, obviously, there are a huge number of financial institutions with large balance sheets. A lot of those businesses, whether it's through the ETF, like Bitcoin ETFs or through stablecoins, are starting to dip their toes in the water. And whether that's like trading infrastructure or security companies, like I think we'll start to see a lot more M&A over the next few years.
Yep. Interesting. All right, more of a kind of like a historical question for you. What is one startup that you wish you had a piece of right now, and what made you miss that deal?
So we spoke to a bunch of like Latin American focused stablecoin savings apps maybe 2 years ago, and there were a bunch like Limon Dollar app. There may be like 50,000 users, maybe like $1 or $2 million in revenue. And talked to a bunch of people who are like more experienced in the region than I did, got a lot of feedback that like expanding from somewhere like Argentina as an example to Colombia, it's harder than you think. And who the acquirers of these businesses are, maybe a little bit unclear, right? And so we just like didn't end up going that deep down, didn't invest in any of these companies. And now there's like a handful of them that are just 50x bigger than when we invested. And you see the size of Mercado Libre or Nubank, like the size of some of these Latin American focused fintechs, they're tens of billions of dollars, right? There's really large outcomes, and we just like missed it. And you saw, I think Felix Pago raised $80 million 2 or 3 weeks ago. Like, yeah, totally a miss on our part, and one we're trying to correct. Like we've been talking to a bunch of companies building around that region.
So then what have been some of your best wins then? Privy, assumedly so.
Yeah. Recently, we're investors in a company called 𝘐𝘯𝘵𝗦. They're at the cutting edge of kind of like zero knowledge
Same here.
computation and all of the infrastructure around that. They had a really successful token launch a few weeks ago. I think we're really excited about like tokens starting to become more interesting financial assets. So we've been supporters of Layer 3 since honestly, like almost when we started the fund in 2021. If anyone is not familiar, they're basically like the performance marketing engine of crypto. Coinbase, Binance, like every large crypto company, if they want to acquire new users, activate existing ones on new products, like they use Layer 3 to basically like run that marketing. Probably at a $17, $18 million annualized revenue run rate. And they've started to like actually use those profits to like buy back tokens. And so I think what we're excited about is like, post-election, obviously Trump has like changed a lot. But if you think about how teams design tokens to avoid the ire of US securities laws, it was basically like, let's make these things fucking useless, right?
Seriously.
Like cash flows or like governance rights or like actually kind of like really doing anything. You just like couldn't do any of that. And so I think we're starting to see like companies in our portfolio that have built real businesses start to just create like interesting on-chain economies. And we're really excited about that.
Yeah, I mean, I think that there's largely a renewed focus around, let's just call it revenue, sort of flywheel of tokenomics. I've been kind of, saying that it's a result of the administration with Trump, and then also Hyperliquid has kind of forced a lot of people's hands in terms of thinking about things differently. And I assume when founders are coming to pitch you now, because our fund also did 𝘗𝘗𝘗𝘗𝘗𝘗𝘗𝑔range. We just do kind of like small size checks, and for a lot of the DD, and maybe I'm exposing myself here, but it's just been kind of like founder based. Good technology, and really just understanding what the product is and where there's going to be some sort of use case for it, but very little like, okay, token's going to do this, revenue from here is going to come into this. It's just been kind of hands off. But I do feel like in the last 6-ish months, that's likely changed a lot with regards to the types of pitches that you're getting, or at least the way that you're thinking about allocating capital into new deals based on like, well, how are you going to create something unique that actually drives value back to the shareholders or token holders? And then also, uniquely, I think there's a situation here coming up where like the divergence between equity and token holders is going to become like somewhat of an issue for some tokens that I've heard on the public trading markets now that are going to kind of like allocate future value to equity holders rather than token holders. So there's like interesting dynamics happening at the token level. I don't really have a question, but those are just two things that I've been noticing, and just curious your thoughts.
Yeah, no, I think it's a really interesting time to be investing in the space. I think one of the common knocks on crypto is like, oh, it's speculative. What the fuck even do these like tokens do? And like, it's a fair question, right? Like, what does uni do? I don't know. Like, yeah, maybe you can like your one vote of a billion, but like, it's not a right to cash flows, which is what most equities are. I think what we've seen in a market that really hasn't seen that many net new inflows, let's exclude Bitcoin for that, but like the alts market over the last 18 months, how many net new traders, users, speculators, like are there really? It's probably been pretty flat. And so I think in a macro environment like that, any team that is able to use their profits to like bend the supply and demand curve, they are going to like shine, right? And Hyperliquid, I mean, I think for a few reasons, but that's definitely one of them, where like there is a like buyer of last resort for hype on any given day, right? Just because there are like very, very real profits. I think that that's going to like drive more tokens to go in that direction. And like, does that mean like fundamental seasons here? I don't know. I feel like anytime, like if you've made that bet in crypto, you've probably lost money. If you've made that bet a few times, but I think like that's just where the market is headed.
Yeah. All right. So in that lens, then, is there a particular ecosystem or chain or set of applications which you believe will outperform with regards to, it doesn't have to be price performance, but mind share, users, revenue? Is there a set of, do you have a general idea of a category, a team, or an ecosystem which is going to outperform in these metrics? And perhaps you could explain some of that thesis a bit.
Yeah, so we've been large investors in DePIN, honestly, almost since we started the fund. One of the first investments we made was a company called DeMo, focused on like auto mobility data. And we've seeded a handful of companies like Daylight and Glow that are kind of building at the intersection of crypto and energy, and similarly using DePIN models. I think there you have businesses like GeoNet, like Helium, that have real on-chain revenues.
Helium.
I think a lot of those businesses, yeah, they are. I mean, the token, ironically, has done like terribly.
There's nothing. It doesn't make any sense, though, man. There's such a disconnect here.
Well, yeah, there is. I mean, I think one counter argument to the fundamental season is like, if you just wanted to like speculate on future cash flows, you should go trade equities, right?
Mm.
So I think the Venn diagram of like people who like want to invest in these fundamentals businesses and crypto, it's probably not that large, although I think it's pretty clearly growing. What's exciting about Helium, right, is like you can just look at the data on chain and see the data offload starting to increase, like data credits burned, like starting to increase. So we think a lot of these DePIN businesses, maybe now they're generating like $1 million in annualized revenue. Like that should be able to 10 to 25x this year. So I would say that's a category we're definitely very excited about.
Yeah. I've heard that quite a bit, and just generally seen those. Like, have seen the adoption, but yeah, just weirdly have not seen like the market catch up to like wanting to buy these things and like bid them up based on these revenues or these user numbers. Like Helium has a million users per day, which is pretty insane. For
yeah, I mean, another thing, and like I don't have firsthand knowledge of this, but like a lot of these teams that raised a lot of money, like Helium, like WorldCoin, you also just have like a lot of natural sell pressure.
Yeah.
And I think like, I mean, the number, I don't want to go down this fucking low float, high FTV thing.
No, I don't
want to spend too much time talking about it. But like, I think it's also just a good illustration that like those things matter at the end of the day, right?
Yeah. I'm curious what your takes are on some of these next generation DeFi companies that have been kind of, token wise have been doing well, revenue wise have been doing well, and just kind of like how you're thinking about more on the liquid side, like companies like people like your even like PancakeSwap has insane revenues as of recent. Like when you're looking at DeFi as a sector, and looking at some of these outliers when it comes to revenues and like users, et cetera, what matters to you from an investment perspective in the liquid side? I know that you guys mostly venture, but if I'm looking to analyze different DeFi applications, like what is the right way to think about selecting assets per se based on-chain metrics?
So I think it's a really exciting time for DeFi broadly. I would say like 2 years ago, we had the view internally that like most of the obvious categories had kind of like, they all had like blue chip winners, right? There was Uniswap and Aave, and like it seemed a little bit unclear how a team was going to come in and disrupt them. And honestly, our view was wrong, because you look at what Morpho and Euler have done with like this vault strategy, and very clearly like could feasibly disrupt Aave. So I think that's been really exciting, because I think if you go back to like what got a lot of people excited about on-chain products in the first place, it was like DeFi, right? And
it was
kind of like, all right, if DeFi like wasn't going to work, then like maybe this whole thing was not going to. And so I think it's been really exciting to just see that market catalyze. And obviously Hyperliquid, which we hold some out of our fund, I mean, the revenue, the growth, like it's just exploded. So I think that's really exciting. And our view now, and I'll talk more about the venture side because that's more of what we do.
Yeah.
But our view is that certain things like fixed rate lending, which we invest in a company called Tenor that is building products there, that have never really worked just because these markets have been like very fast money, very speculative. Yeah. We think now are potentially going to start working. And I think even, some products, like I spent a lot of time working in index co-op, which is basically trying to build like on-chain ETPs back in kind of DeFi summer. Like there was like a flash in the pan of success, but like it was never really sustainable. But I think now you look at like the amount of on-chain liquidity you have in order books, given Hyperliquid success compared to like a year ago. And I think there's actually like a whole broad just range of new products you can build. And then if you believe like the float of stablecoins is just going to continue going parabolic, which we do, the addressable market for any of these products is like way higher than it was, a year ago. So we're really excited, and I'd say we've been like more active than in trading like liquid DeFi assets is like real world companies building various flavors of real world assets. And the view there is really like you look at a spectrum of like liquid and fungible assets, and the highest one is probably the US dollar. You go a little bit below that and you have like on-chain, like T-bills. And we're starting to see like go all the way down the stack to less liquid and less fungible assets come on-chain. And that could be real estate, it could be venture, but we think there's going to be like many, many large companies in a handful of those categories.
Yeah. Yeah. I mean, stablecoins have done more to improve the perception of our industry to outsiders and to institutions than I think anything else since the genesis. And I mean, it's just been great to see that. And now you have politicians and regulatory bodies wanting to extend the dollar's dominance. You combine that with a renewed DeFi ecosystem, as you said, a bit more of these fixed rate lending, which it was tried in 2019 and 2020 and 21, but it just never kind of picked up. It's just too boring. And I think now it's like now, now there's people that want to do it. Now there's actually capital allocators that would see the value in this. And then you extrapolate that all the RWAs, whether it's tokenized assets, bonds, etc., real estate. And I mean, yeah, it's an exciting time to be on chain and investing. Any closing thoughts, Reagan? I appreciate you coming on, man.
We're really excited. Like, I think the opportunity set in front of us in crypto has like never been larger, right? It's like, let's keep building.
We will, sir. Good to see you. And
yeah, thanks for having me on.
Have a great day. All right, buddy.
Yeah, you too.
Cheers, man. All right, guys. We are bullish on Deepin from Reagan. We're bullish on the growth of RWAs, fixed rate lending on chain. They have a really good portfolio. They also invested in Lagrange, which is kind of on that AI ZK lens, right in between, amongst other kind of those. I think we probably have a couple of shared portfolio companies actually. My key takeaways there was the cross-border payments and the Latin American adoption of crypto, I think, was slept on by a lot of VCs. Second is that that is now one of the larger categories in the space that I think that is unignorable. And third is that, like, I mean, if venture investors are seeing this type of return and this type of interest, then I think that there's clear demand for more speculation on chain coming soon. Unfortunately, guys, another hack as we brace for RJ to come up. So it looks like the hacker collective has released the full source code of an Iranian crypto exchange after orchestrating a $100 million exploit. This comes at the precipice of a war between Israel and Iran. Truly a really, really sad time. But once again, guys, I just want to prioritize that OPSEC and keeping yourself safe in these times is very, very important. I don't really know what the ramifications are of this exchange being hacked are in the immediate term, but I do know that it's something that you ought to be careful of. And actually, today, I think something that we didn't even cover was there were 16 billion either accounts or passwords leaked. So guys, once again, just check your 2FA, check your backend, and make sure everything is good. All right, guys, up next, we have RJ, the founder of Aligned. Looking forward to having him up on stage. We are going to bring him up shortly. RJ is a good friend of the show. RJ, welcome to the show, man. Good to have you on.
Hi, everyone. Thank you for having me.
Yeah, man. Where are you calling in from today?
Right now I'm in Uruguay, so in the south of the world.
Beautiful. You just did a trip to Europe, though, right?
Yeah, actually I arrived here yesterday, so I have been in many different time zones the last few
Nice,
weeks.
man. What were you what were you guys doing in Europe? I saw some alpha around some sort of institutional stuff.
Yeah, so we have been traveling a lot because we have some clients from different backgrounds that they want to use Align. And I was there trying to explain what's the stack that we're building and trying to understand also the needs, so we can check exactly what we can offer and if it's useful. So most of them are institutions or Web2 companies or finance companies that want to use Ethereum as a financial backend. And yeah, we're talking with them, trying to understand their needs and improving our offerings so we can cover everything they need.
Yeah, man. Yeah, man. Very cool. So it seems like the reality of ZK coming into practice is is happening not just in our industry but outside. And recently, you put out a pretty spicy tweet saying, at this point, if you don't recognize that ZK is the default solution for scalability and verifiable applications, you are out of your mind. That doesn't mean that ZK alone solves everything. But if you don't adopt it to improve your protocol, you will fall behind quickly. Now, I have a counterpoint for you, which is sometimes I feel like people in ZK treat ZK as if it is a solution to everything, and that they think about the solution before the problem. Maybe you can talk us through some of the actual problems that you guys are seeing teams in the ZK space solve. What are the most exciting problems and teams that are solving these problems, including what you guys are doing at Aligned?
Yeah, so I actually agree with you. Like, what I'm trying to say with the tweet is the following: ZK is a tool, right? And right now, this tool is very good. And if you want to do certain things on Ethereum or any blockchain, this gets you 80 or 90% where you want to go. That is actually verifying certain compute, proving certain compute, and verifying directly on Ethereum. And what we're trying to explain is like, yes, we are using ZK. You could say we're a ZK company, but in the end, we're using ZK to package the trust of Ethereum and allow people to access the liquidity and the trust of Ethereum using ZK as the tool, right? So many type of companies are working in ZK trying to build different use cases, right? I think that we could categorize them in maybe three companies, three type of categories. One is Rollups. What they want to do, they want to verify their state directly on Ethereum and have a native bridge directly with the L1. Then we have machine learning or ZKML that has been maybe lagging behind because it's a very particular use case and it needs a lot of advancements and new technologies. I think there's a company, for example, called 𝘱𝘰𝘮. They're doing amazing work in using this tech. And actually, they're also very pragmatic. They are building a product and at the same time improving the tech behind it using ZK. So when ZK is actually ready for production for what they need, they actually will have the best technology. And then what we have is a new sector that I think is coming, that is verifiable applications that are not, they're rollups, but they are not EVM rollups, right? They're applications written in Rust, probably. We have seen a few order books. And the idea is for offering these services to be verifiable direct on Ethereum and improving the experience. Like many of the stuff that Starward did in the past with 𝘪𝘃, I think a lot of people are realizing that was very useful. And we're using new technologies in order to offer all of them. So the point of the tweet, or what I'm trying to express, is, hey, ZK is already here. Like before, it was very slow and it was very hard to use. Now it's very fast and it's actually pretty easy to use because you just write Rust. So when you are designing a protocol in crypto or in other industries, you now have a tool that is actually ready to help you improve and simplify the protocol. So we think it the other way around, not of ZK going to solve a problem, but more like, hey, now that you want to solve a specific problems, there's something that is already ready in order to help you and simplify the whole thing.
Yep.
And we have been talking with certain companies that they are doing that. And the good thing is it's easier to build. And what we're trying to offer is help them make things even easier. So making the proofs easier, providing toolkits and more infrastructure.
So we were actually both at Stablecoins, and well, first of all, I agree with what you're saying, and I appreciate the clarification, because I think that it's a common thing in infrastructure in general, in crypto, to sometimes create solutions to made up problems. But clearly, ZK is in a different world of itself with regards to its, I mean, just the advancements we've seen in the last years. I mean, we're not talking like 10x's, we're talking 100x's and 1000x's in terms of performance and in speed and such. And I mean, it's hard to see from the outside, but it is happening. So kind of flipping switches here, we were at StableCon maybe like 3 weeks ago together, actually, and there was a lot of cross-border, infrastructure for stablecoins. Recently, Matt Hugin, the CIO of Bitwise, put out a tweet saying, "Wait, I thought you said credit cards were good enough and that stablecoins didn't have a use case in payments because retailers were seen using stablecoins to push back against card fees." Maybe you could talk to us a bit about your experience from stablecoins and their use cases with regard to payments, how ZK can fit into this world, and specifically coming from South America and being a native of that part of the world, kind of what the rise of stablecoins means for you in terms of cross-border payments. And I know that we talked a lot about how there's a lot of supply in the States and demand globally per se. So maybe you could extrapolate on that with regards to Matt's tweet here about retailers using stablecoins to push back on card fees.
Yeah, so I think the stablecoin market is very different from emerging markets and from the US or Europe, right? So the use cases are completely different. And I probably, we didn't spoke about this, but in stablecoin, the thing I noticed is there were two main people, or actually three. Stripe and 𝘬𝘭𝘵 together working and building new solutions, banks that are the supply side. And then I saw a lot of new companies from Africa and Latin America that were very busy trying to solve specific issues, and they're growing a lot. And the way, I mean, I have been using stablecoins for over maybe 10 years now, and I always say that Align wouldn't exist without stablecoins. We wouldn't have been possible to build any of this. And if you speak probably with FedEx, they will say the same. That is not only a tool that we want everyone to use, it's something that I have been using for a long time. And I know it solves specific issues for me and people from our team. And what the data is showing, I don't know if you guys saw, there's a report from Artemis. They do data analytics. They did a report that is very, very useful around stablecoins. They grab data that is just KYC stablecoin usage. And one of the things they notice is stablecoin adoption is not getting used only in B2B, but there's already $1.1 billion of credit cards backed by stablecoins that is used monthly.
Wow.
So it's not only for payments, but it's actually what people are using is being able to access dollars. When you're in these countries, you don't have bank accounts that can accept dollars outside the US. And the primary use case is not only for fees, but it's actually, hey, I don't have a way to use dollars, and it's not only cash. And this is the only tool I have in order to use dollars on the internet. And that's why I have been using stablecoins, for example, for a long time. And the technology is catching up. Right now, you use a wallet that has Bridge that was acquired by Stripe. You receive dollars directly from the US, you get stablecoins, and you can start spending with a card. That's 5 minutes to get onboarded. So more than payments, I think what we have seen now is access to dollars. The next phase is payments, but I think
and
that will
yield
come
too.
Yeah, and yield, because you don't have any way to access yield in dollars. What is like 4% maybe that you can get on 𝘰𝘮𝑒, or depending on the market, right? And the next wave, I believe, it will be like we will flood with stablecoins all of these blockchains, and natively we will need payment solutions to pay from Arbitrum to Solana. Like we will need a Visa, like for stablecoins for all of the volume that we'll have, because these people for now are using as a gateway Visa and MasterCard with the cards, but we will need a way to start paying to merchants and all of them, or between each other, that is native stablecoin.
Yep.
So I think that is the next frontier in terms of infrastructure, and I think ZK is going to be useful there, because the next bottleneck for adoption of stablecoins, in my opinion, is privacy. I don't want to go to a coffee shop and have the people know if I spend in a flat white or in a matcha latte, right? So I think that's where ZK is going to be very useful for stablecoins.
Yeah, man. I mean, the industry under-indexed on privacy and is now kind of really whirling back to it. Like, oh man, we really need to prioritize this because it's going to be something that's very important. And if we don't, these systems could never operate in a public environment. Just imagine if your current financial life was in a public environment, right? So one interesting thing that you guys have pushed from the Align side has been your new ZK rollup RAS, basically a way to easily spin up rollups in using Aligned. I'm curious kind of what your thought process was behind this, given that RAS has been an active sector for some time. What are your key differentiators? Why would somebody use Aligned to build their own chain?
Yeah. So the reasoning behind it, why we want to do one on our own, is because we are not satisfied what we see in the market. Most of the RAS providers that we see, for example, they offer every single stack, or most of them, right? They offer Arbitrum, Optimism, well, Polygon CDK now is deprecated, but they offer all of them. And from our philosophy point of view, we want to offer the best experience ever. And for that, you need to remove certain dependencies and have something that is vertically integrated. So what we'll have is going to be cheaper, it's going to be faster, and it's going to be easier to use. Like, you will go to a website, you will connect your wallet for the deployment, you will pay us, and you will be able to launch your rollup in one click. And the whole idea is for us to help you facilitate and run infrastructure, but you should be able to launch your rollup even without us. Like, if you don't want to use us, you still should be able to launch your stack. And we're using the stack built by Lambda class that is building a CK-based rollup stack using Ethrex. So we're packaging up, we're using this and saying, okay, we want to make the deployment very easier and connect to everything that we're offering with Align. So you will be able to aggregate proofs directly with us. You will be able to have interoperability because we're building an interoperability protocol. And in the future, it will work across our meta proving service as well. So you don't need, we know the future is CK for this technology, and we're building the whole infrastructure for these rollups using CK and in the future-based rollups. And the providers that we see in the market, because they're offering many types of solutions, it's not tailored-suited for this technology. So we thought everything from the ground up, knowing that we will only use this stack that uses CK, TEs, and in the future, it will be offering base rollups. And all of this is a business decision, not just a tech. You need base because you want to access liquidity of the L1. And you want to use CK because it's the safest, faster, and cheapest solution to verify state.
So you guys are working with Fede with his Ethrex product, which is allowing you guys to launch ZK rollups with Aligned.
Yeah, the integration, they have been building this L1 client that then is also used for L2. It's very minimalistic because I think the goal is to have around 50,000 lines of code for the whole thing. It's already very performant, the launching benchmarks, and it's designed knowing that you will run a Rust line execution client, you will use a CKVM, either SP1 or 𝘰𝑂, in the future, any that is very performant, and then you should also use TEs because we are we're probably one of the teams who is most excited about CK, but at the same time, we know that there might be issues, and you need to hedge against that. So we're using TEs in order to have like a multi-prover setting.
Very interesting. Okay, and what is it like working with Fede?
It's going like in a Ferrari or in a Formula One track. You're constantly at max speed. You don't know when, you need to take another turn, and you have another crazy idea, and you have to go even faster. So it's very fast, but in an extremely high-paced environment, which is good. I like it.
RJ, one last thing for you. If you're looking at the space of native rollups, Justin Drake has been putting a lot of effort into this. He actually recently gave us a talk at L2 Days in Berlin, which is happening, I guess, just this week.
Yeah.
This has been something that has been exciting. A researcher at the Ethereum Foundation, 𝘗𝘳𝗧𝗏𝗏, I think you've heard of him, put out a thread about native rollups and just kind of the problems and the mechanisms of creating them, as well as why they matter. What's your take on native rollups? Is it something that is going to kind of be a big splash like base rollups and then end up having not as much adoption, or do you think native rollups is a big solution to solving some of the L2 scaling problems?
No, I think it's going to be a great upgrade, and it's something that we're actually excited about. Like both base and native rollups. You need both. And especially it's going to make our lives easier. Like one of the things we talk a lot about internally is we are helping businesses build on top of Ethereum. So making it as easier as possible to launch your own rollup because you want sovereignty and you want many other things that we can discuss in another time. And having native rollups will make things safer and easier and to implement. So the stack solution, it will be easier. And on the other side, this is something that we always say. On the other side of these businesses, there are also CTOs. So we need to make sure that the tech is also easy to understand to people who do not come from the same background as us, but they make technical decisions and they care about certain things. The simpler it is and the safer it is going to be better for them. And it's going to make the onboarding of them way easier and we will have less friction. And governance of all of these rollups is an issue. Native rollups is going to solve many of these things. And I'm excited to have all of these things, and Align will integrate all of this technology. We are very, very bullish in the roadmap that Justin Drake and the whole team in Ethereum is pushing forward.
RJ, appreciate your time, man. Have a great rest of your day. Look forward to seeing you here in New York next week. And Ken, I think you'll probably be at one of the two, or at least some of the teams.
Yeah,
will be.
We'll be there in France. Thank you, Andy, and thank you for everything. And congrats on everything. I think this is a great show, and you guys.
I appreciate you, man. Thank you.
Bye bye.
Speak to you. Alrighty, guys. It's good to get caught up on the ZK and the Rollup side of things. It feels like we spend less time in the ZK space, having with this year a lot, etc. It's a consistent reminder of the progress happening in that space. All right, guys. The next topic that we have is around L2Beat's recategorization. So L2Beat recently put out a tweet and a post signaling their recategorization is the biggest update to their framework yet, redefining what it means to be an Ethereum L2. Noticeably, they had some people on their team pushing back against 𝘰𝘮𝘰𝘐 specifically because of the risk parameters of 𝘰𝘮𝘰𝘮, and they had over 130 projects were reevaluated. Many of them were effectively lowered in their risk parameters, or sorry, technically increasing in their risk, lowered in their categorization. And yeah, I mean, look, I think that there's a lot to take away from L2Beat's work. They've done an incredible job in the space and continue to do so. And look, I think this is bullish, but I think it also forces the hand of 𝘱𝘭𝘐𝘮𝘰𝘮𝘭𝘭𝘪 to actually pay attention here and update some of their, I believe, what is DA bridge to Ethereum being the main thing that L2Beat is now looking for in some of these recategorizations. There was kind of a pushback against 𝘰𝘮𝘰𝘮 L2s, asking if it was a failure. I saw Bread Guy comments in there saying that he thought that this is probably the only way that these will be able to compete with alt L1s in terms of scale and speed. So, look, I'm bullish on L2Beat. Absolutely love their work and excited to see this recategorization go live. And yeah. All right, guys, up next we have Sid Powell, CEO, co-founder of Maple, one of the most amazing stories of DeFi in the past years. I probably spoke to Sid for the first time when I was like 21 in like 2020 or something, or 21. So a lot has changed since then. We got him up here now. Sid, good to see you again, man. Good, man. Not as good as you, man. Congratulations on some of the recent success.
No, thank you. Thank you. I appreciate it. It's been, yes, I think we've had pretty good momentum so far this year, but I don't take it for granted. It's certainly a lot of grinding behind the scenes.
Yeah, man. So look, I gotta tell you that I started this poll 2 weeks ago or so. It was like, how long will the revenue meta last? And I got absolutely blasted on Twitter for it. But the options that I put were less than 3 months, less than 6 months, less than a year, less than 2 years. I think I should have put more than 2 years.
Yeah.
But a lot of people did like less than 3 months or less than 2 years, which assumedly is like more, like it's gonna last forever. I do feel like you guys have been building for this moment of people actually caring about, let's just say, revenue, economics, and such more so than others. I'm just curious, like, what's the state of things with regards to your view of how the market is assessing different DeFi protocols based on different on-chain metrics, and kind of like how
Mhm.
you're viewing it from the founder's perspective or the builder's perspective, as far as like what the North Star is, or one or two things to really kind of focus on in terms of metrics.
It's a good question. I'd say it's kind of my view on it has shifted over the last 12 months. If you'd asked me, Andy, 12 months ago, what I was focused on, I would have said it was 90% TVL and then maybe 10% or less revenue. Like we certainly paid attention to it because that's what pays to keep the lights on. But I would have said that, you know, us internally and then also the VCs and the funds and everybody who holds our token, what they cared about more was TVL. And now I would say it's kind of shifted. I don't know if it's hit 50-50 yet, but nowadays, anytime I talk to a fund, whether it's a liquid fund kind of looking at the token, one of our existing venture backers, or just the community, what comes up more and more is the revenue side of things. So I'd say it's maybe not quite 50-50, but we've gone from 90-10 to maybe like 60-40, getting close to 50-50. And I think across the board, the other thing that we hear as well is every liquid fund we're talking to is kind of trying to identify revenue producing teams and protocols and focusing on that rather than TVL, because unfortunately we've seen that in a lot of cases you have this massive explosion of TVL that then quickly evaporates once a team or a protocol launches their token. So it's not sticky, it's not a durable business. And that's what they're using revenue as a proxy for now.
Okay. And I've been kind of using the mental model for these funds and for these investors who are now really trying to get a bit more exposure to these types of assets. As look, I mean, it was the new administration in the States
Yeah.
came in and really just kind of catapulted people out of this mindset that I almost kind of.
Yeah.
I don't blame 𝘱𝘭𝘆𝘵𝗫's Medium blogs back in the day, but like he really kind of started this like, this is a useless governance token, do not buy,
Yeah.
like,
Yeah.
you know what I mean, right? And so
Which
that
would have been
happened.
straight out of the memo from his lawyer, right? Is like you have to tell everybody that's worthless so that you don't get sued.
Exactly, right? And that was the state of affairs, which looking back on it was so silly. So that happened, and then the other kind of thing that I'm pointing to is obviously just like the success of Hyperliquid, the model there, the token, et cetera. So that just changed the way that the market has thought about tokens and DeFi in general. And it seems like that's also coming at a time where there's also kind of the power law hitting the market in a stronger way than ever, as far as the dispersion of different assets in the altcoin market broadly.
Yeah, I think so. And you have I think a couple of things kind of contributed to it and to kind of the rise of the let's call it the revenue meta. But you had a lot of L1s and L2s that were valued at 2 to 3 billion last year, or in private rounds in 2023 and 2022, and a lot of those are now valued at 2 to 300 million FDV because they never landed they never landed users or activity on their chains. And so meanwhile, you've seen the interest flip to now where you want to own the kind of the app because that's where the customer relationship is, which is where you can kind of charge revenue. And you've seen, I think, where we've tried to position ourselves is we think that DeFi protocols are going to outperform memes this year because I similarly to you, I think memes were an equal and opposite reaction to if you do a DeFi protocol, you get sued into oblivion. And so a lot of people then did useless, valueless meme coin tokens. But in a world where you can build real protocols that have real revenue and real businesses that are sustainable, I think there's going to be less oxygen for meme coins. And so I think we are trying to position ourselves to stand out by being a DeFi protocol that has revenues. The only way I know how to do a business for 20 years that'll have it survive is if you can generate revenues to pay for everything for the 20 years. Otherwise, you're effectively just on a melting ice cube. And so we value independence and being in control of our own destiny. So we want to continue to generate revenues. And I think there's maybe going to be half a dozen DeFi protocols that can do that. And so we want to be part of that pack. And so I think that's how we are trying to stand out. And I think that's going to be the play for this year for teams who are successful.
Yeah, I agree. I mean, I think that's going to keep happening. I don't discount that there will be select memes that do well. I mean, there always
Of
will
course.
be,
Yeah.
but I think this dispersion is going to hit harder on some of these L1, L2 tokens,
Mhm.
some of these kind of like different infrastructure style plays, which are seemingly just trying to figure it out as well. Because I think a lot of them have to figure out how to almost like dog food their own technology and then build applications on top of what they already
Mhm.
have that like attract some sort of users. So
Yeah.
shifting gears here, more in towards like the nitty gritty of DeFi. Um, so you've kind of prioritized Maple around stablecoin growth, private credit market taking share away from banks in general, asset
Mhm.
management shifting on chain as well. Um, I'm curious, like at the kind of like intersection of all three of these, you must be working with different teams and protocols that are specialized or do well in enabling you to do this. Who are the most important parts to the Maple Finance success story? Whether it be infrastructure providers, yield partners, et cetera, and kind of how have these partners really helped you succeed?
It's a really good question. It's a very broad question. I'll do my best to kind of answer it succinctly. So I think where we've seen the most growth this year has been on Syrup USD, and a lot of that success has been due to our DeFi partnerships. So I would attribute a lot of the success and the kind of the value in partnerships there to, we got Syrup USDC onboarded as collateral to Morpho and Euler. So those were really important partnerships. Our first major DeFi partnership there was Pendle. So they helped with hedging and also speculation on the interest rates. And then more recently, we've had a really large partnership with Spark and the Sky ecosystem. And we want to continue growing that. We view them almost as the central bank of the DeFi space. And then recently, about 2-3 weeks ago, we launched on Solana, and
Yeah.
that's the big partnership there has been Camino. So Syrup USDC is in the lending market there, and has been able to be looped. So there's a number of partners, but I think those DeFi partnerships have probably been the biggest driver of our growth over the last 9 months. And then in terms of infrastructure, we are not only DeFi, we actually have a lot of CeFi partners, and I think that's one of our unique differentiators is we can accept collateral in a qualified custodian. So we do a lot of work with Anchorage, with BitGo, Copper. So I think that custodial infrastructure has been really important for us in serving institutional borrowers. So they post us Bitcoin or Sol or ETH or XRP, and we send them loans on chain. But we couldn't do that if we didn't have these custodial partners.
Yeah, I mean, that's the part of the business that I recall more so than ever previously from 21 and 22. But I think this expansion into stablecoins and also just into more
Mhm.
into more markets that anybody can participate in has really served you guys well. Obviously, there's been this kind of like power cohort of DeFi protocols as well that have really emerged, given the ones that you've named as well as on the CeFi side. One info question that I have. Yeah, go ahead.
I was going to say, and I think one of the interesting trends we've seen is that some of the DeFi protocols who have done really well lately have kind of had this almost hybrid CeFi DeFi approach, where there are aspects that are quite centralized, and then there are aspects that are fully on chain. I think Hyperliquid and Athena are two of the other ones that really come to mind in a strong way.
Yeah, definitely. I mean, the puck is going there, right? So I mean, teams that are skating towards
Yeah.
RWAs institutions, it's very clear. And I mean, the news the last 3 months, looking back, to where we were, has been it's been shocking in the
Yeah.
best way possible. Um, okay, so one thesis that I have is around opinionated applications, right? So there is
Mhm.
a world where application reaches enough product market fit on a given shared state, on a given chain, like Ethereum, like Solana, and you have enough of a sticky user base to actually go and basically create
Mhm.
your own chain or your own
Chain. Yeah.
app chain, et cetera.
Yeah.
You have the application being the core piece of it, the chain like the like the bottom of the funnel, and you basically build this thing out as like as a uni chain, as a as a Maple chain. Will Maple ever launch a chain, or is that just not something that you're thinking about?
It's a good question. I would not launch a chain for the sake of launching a chain. I think we would launch one if we found that it was the answer to a big problem for us. Right now, the main things in front of us, we're trying to keep the blinders on this year, and so our goals are deploy more cash into loans. So we've been growing exceptionally fast, and that means that we build up cash that we are trying to deploy and make sure we stay as close to fully utilized as possible. And then has been to get Syrup USDC cross chain, and then also grow the TVL through growth of the Bitcoin yield product. But I think to do an app chain, we would have to see that there's very low friction and bringing in new deposits, and also that it doesn't upset our borrowers who are used to taking down funds from us on, at the moment, Ethereum, but maybe another chain in future. So I don't need the same speed advantage that a Hyperliquid or that a DYDX needs. Like we're not a high frequency protocol, so I have less of an impetus to go and start an app chain to reduce cost and improve speed. The people who come to us for loans, they get one, maybe every week or every few weeks. It's not a high frequency type operation, and so that that kind of protects us on that front.
Yep. Yeah. Good point. Yeah, I think more around like sovereignty of excessive gas fees or things of this nature. But if people are moving large sums of capital, I think what probably matters to a lot of your users is more about censorship resistance and these types of properties.
Yeah, exactly. And the other point I'd add is where we've had some interest before has been the idea that we could have synthetic assets that represent your assets in custody. Like if you post $100 million of Bitcoin to Anchorage, that we could give you like a synthetic receipt for that, so that everyone can track it for transparency. That's kind of been that's so far been the biggest plus that we've looked at for an app chain. But otherwise, we don't feel tremendous pressure. We just want to focus on kind of growing the core business.
Yeah. Yeah. One more question. When you're looking at the landscape of being a founder, right? You're looking at going through the last bear market, hunkering down, gritting through that. What kind of advice do you have for other founders who have gone through, long bear markets, have gone through, uncomfortable situations on chain, who have, had to persevere in the way that Syrup has, in the way that Euler has, in the way that a lot of DeFi has just grown its resilience as a whole, as a category? What kind of advice do you have for founders who, are in a situation like that, or perhaps are headed for one and don't yet realize it? Because it just kind of jumps out at you. I tell you that.
Yeah. It never happens when you expect it.
I'll tell you that.
I'd kind of put three points, or three key kind of points. Some of them are tactical, some of them are philosophical. So on the tactical point, I think when you're going through a crisis, take all the medicine you can up front. So we had to do layoffs, and then everyone who stayed had to do salary reductions post FTX, but we did it up front. We didn't do paper cuts where you do one round of cuts and then you wait a couple of months and you do another. We took all the medicine and ripped off the Band-Aid up front. And I think that was important, one, to give people certainty that there wasn't going to be another round. Two, just transparency, and we got it out of the way quickly, so there wasn't any lingering dread. But it also gave us the most optionality because we started saving. We saved the most money rather than trying to hope and pray that things would get better. So take your negative, take your medicine up front. The second thing I'd say is, focus on what you can control and keep everyone on the team aligned to a North Star. It was really important to keep morale up and, and know that we were still building towards something much bigger. And then the third point I would say is, there's exactly 0 great businesses out there that have not gone through a period of major setback, right? Like you look at Amazon, their stock cratered 97% after the .com crash. You look at Facebook, they had this crisis point with the shift to mobile. You look at how many near-death experiences has Tesla had. Same with SpaceX. So there's exactly zero great businesses that have not gone through one of these moments. So I would just say almost expect that it's going to have to happen to you. And your key is most businesses are not incredibly successful in the first 5 years. So you actually have to plan to be doing this for 10, 20, 30 plus years. Like look at Jensen Huang from NVIDIA, right? He's one of the longest serving CEOs in the market. Most of their success has been in the last 10 years, right? He wasn't benchmarking himself against everyone else at year 6. And so I think that's the way to operate, do it for the long term.
Man, I think taking the pain early is something that I've learned in life that it's hard to do. Goes for everything, goes for relationships, for just kind of cutting losses, for because you get caught in like this like sunk cost theory or sunk cost bias,
100%.
right? Where it's like, oh man, I can't cut this because just but it's like no, like man, even just saving 1%, 10% is better than losing 99.9%. You know what I mean?
Sometimes you can't finish the day with a win, but you just have to not suffer an L during the day. And so but you just accumulate those over time. You get up and you keep grinding through every day.
And Sid, one last thing for you as well on the advice side for working with expanding out of crypto natives and into institutional, basically capital and that kind of world. What kind of advice do you have for founders who are also looking to break into that world more with their protocol? When it goes to communicating with these more traditional financial firms, when it goes to kind of understanding what they want and need, maybe you could just provide a bit of insight as to what you found, like, relationship wise, strategy wise, and really what these institutions want, and then how you're going about providing it for them.
Yeah, it's a good question. And it's one that a lot of people are dealing with. Like as we're seeing more interest from institutional and traditional Wall Street players in what's going on in DeFi and crypto, you're going to have to navigate it more. So I think expect it to take a while. We recently had the announcement of closing a deal with Cantor, but that was months of work and a lot of negotiation and kind of prep behind the scenes.
Congrats.
Expect it to take a long time. Also, in terms of selling, I think a lot of people focus too much on expounding on the virtues of their tech, and the tech doesn't sell itself. Instead, what you have to do is show how whatever you're producing aligns with their self-interest. So in our case, if we're borrowing from someone, we're paying interest, and so we're generating revenue for them. And we're showing how the relationship can scale. And so I think really emphasizing how the relationship can scale, because for a lot of these businesses, they're very large and there's an imbalance where most of the crypto teams trying to work with them are going to be startups or pretty close to startups. And so you have to sell them on investing in the future scalability of the relationship and tying it back to their self-interest. They're not going to do it out of benevolence or some underlying belief in the technology. They're going to do it because you help them earn a bonus at the end of the year. And so you better make sure it's a damn good bonus for them. And that's going to come from you being able to show this is going to be a large relationship in future or show that's going to generate them some revenue.
Yeah, man. They want to see first of all, tech wise, I think a lot of us over indexed on, how much of the tech these institutions would care about. In fact, I think a lot of us over indexed on how much Ethereum would win these relationships versus the other chains. Like I was quite shocked, frankly, to see BlackRock's 𝘵𝘪 go to Avalanche and Solana so fast. Like I just remember thinking back in the day, like, oh wow, it's just Ethereum, because like no. They want to expand where anybody is, and they also will likely want some sort of like permissioned chains as well. That's like on the tech.
Yeah, it's Peter Thiel's point, right? Like the product doesn't actually sell itself. You have to have you have to invest in sales. And even if you look at somebody like Elon Musk, he always talks about how he doesn't have marketing team. Well, that's because he is, one of the best marketers in the world, right? And so, the idea that Ethereum would just sell itself, I think is mistaken. And you actually have to have, I think Solana's done a much better job of this than Ethereum. And Ethereum's kind of recognize. I think the Ethereum Foundation is recognizing that now, but you actually have to be selling the product, and you have to have dedicated sales teams. It doesn't just go and sell itself.
Well, Sid, man, I hope you guys hit that goal of $4 billion AUM by the end of the year. And I hope you double your monthly revenue. And I hope that token keeps going up, man.
Thanks, Andy.
Thanks for coming on, and appreciate your time. And hopefully see you next week in the city, man. I'll be around.
Yeah, would love that. Thanks for having me on, Andy. Cheers.
Cheers, man. Speak soon. Peace. Alrighty, guys. Up next, we have some interesting news with regards to stablecoins from Coinbase. Sid is a great friend. Been part of the show I guess, since like 2021. We kind of covered Maple in that regard. And they were just doing the private, kind of uncollateralized loans. Obviously, got burned through FTX, but have had one of the best comeback stories, in the market as a whole. All right, so guys, what we had for Coinbase is the Coinbase derivatives and nodal clear will enable USDC as collateral in US futures markets, advancing stablecoin adoption and regulatory approval. Guys, I just think that Coinbase is going to push forward on perps very, very quickly. There's going to be an acceleration of adoption from US-based companies using Coinbase. And this is just another signal to this stablecoin super cycle. Is it real? I would have to say you have to look at the circle chart. If you've missed that trade, I think your best bet is going to be it looking like an airdrop fractal where it kind of rips off the start, pulls back, kind of levels out, and then hopefully you can get some good DCAs in. I missed that trade. I'm a big coin holder, as you guys know. If you watched some of the early episodes, we talked about our portfolios here at the Rollup. And so, yeah, that's where we're at on the stablecoin side of things. It's now more and more of a prominent sector in the show. So, yeah, coming up, I think we have Bobby. I need to confirm briefly, but if not, we will. Been a great show so far. Lots of different opinions, different people. Just generally just a different category of people on the show. Always great to see that. All right, so I think Bobby is running Dupe.com. Dupe is actually quite an interesting project. So Dupe has kind of ruffled the feathers of different people in the space. But basically, they are part of this internet capital markets category, right? Which has been this really rise of these projects that are actually generating revenue and then tokenizing themselves. So Dupe is one of them. Again, I think we may have to push him back, but hopefully not. But basically, what we can do with Dupe is look for similar products for far less money. So you can search for different clothing, furniture, etc. Bobby is the host of High Resolution Pod and co-founded Live Candid, and now is the CEO of Dupe, which is snapping up your dream furniture at the lowest price, powered by Solana. So I think we got him.
Can you hear me?
I think we're good, Bobby. I think we're running on the last extension of the internet right now.
Well, let me tell you right now, I've got 17% battery. A generator's going at Soho House. Wi-Fi is shit, so I'm basically connected to a hotspot. I'm standing at a DJ booth. I guess see that,
dude. No way.
In a freaking room that people are going to come in and out of. But we're
so the Wi-Fi dropped at Soho House.
Yes.
Wow. Yeah, there was a massive lightning strike. So I'm just across the road in Queens here, and there was a massive lightning strike that I saw.
Why?
It was huge, man.
I'm in the city. I'm in the city, and I'm getting bombarded. But you know what? We're here. We're gonna go until my battery's at 0. How about that? If I drop, it's because of that.
All right, boss man. All right, man. Well, first, I would love to just understand your perspective of this internet capital markets idea, and kind of why you feel that this is something that has been worth pursuing for you, kind of coming from your background? I know that you guys are focused on some of these kind of I would call them like commerce hacks that are beneficial for consumers. But yeah, man, maybe walk us through the internet capital markets thesis. Why is this a new category of the crypto landscape and of capital formation? And why is this something that you're a part of?
Yeah, so I'm not going to give any like grand philosophical take here. I think the broad strokes is we accidentally entered this market, and I saw an opportunity to capitalize on some of the benefits that crypto brings to the table. First of all, I noticed very quickly that Dupe has like a huge following online already from like normie people, and we just acquired a whole new customer base in the crypto world. And the crypto world is like very incentivized to talk about us every day, much louder, and like inviting their friends and family and neighbors and coworkers onto the platform because they're like invested in the success of our token, which is, different to the company, obviously. But by the way, you guys are going to hear people go in and out.
All good. Let it fly.
In and out.
Let it fly.
And so like we came into it accidentally. We didn't really know what we were doing. We didn't even realize the potential of what we were doing until we started noticing how quickly we were getting feedback, how much people started talking about us, the theses that they were writing about the company, which aligned very closely with like our perspective on how big this can get. And so like the whole, like the big idea was, can we jujitsu all of this new energy that we found into something that like exponentiates our growth, speeds up our growth faster. What we found is by having a token, you can do some really interesting things. Like in Web 2, we have this concept called points, right? Like you guys know this. If you've used Rakuten, if you've used, cashback sites like Capital One Shopping and stuff, they incentivize you to buy from partner brands. Well, if you use a token, you can actually do more than that. You can incentivize people to use your product more. We've built a cash machine at Dupe. So the more people use Dupe, the more money we make. And so incentivizing people using our coin turns out to be like a really great mousetrap. And in a way that we didn't even anticipate. And so I think that there's a lot of opportunity to use our token that benefits not just our growth and getting people incentivized. Like we have, I think, 7,000 or 8,000 holders of our coin at this point. They're all talking about Dupe a lot, but also normie moms, normie like college grads who aren't in crypto would get into crypto in like a really interesting way by using a website that they love to use and incentivizing them to bring their friends and family on board in like a very scaled way as well. So like these are things that we're currently playing around with, and that's how we see the potential right now for Dupe.
Yeah. I mean, I think the target market of your core consumer is probably different than the people that are holding the token. But what the token does is that it then allows you to have, as you said, like some sort of flywheel for attention, and then thus if you can keep value within the token, it provides then your actual target market to have these benefits that they wouldn't previously have had. And I think part of this idea is around, okay, you guys have a business that you've been running that is, I think there's like what, 4 million users in the last month or something like that.
No. We don't have 4 million users. We have a million. We have a million monthly active users, but
a million.
Our goal is to get to 4 million monthly active users by end of year.
By end of the year, got you. Yeah, I misread that tweet. So a million users. AI powering a lot of this shopping experience. And so it's kind of like you're combining two parts of the world that like previously would not have been combined. It
would never have been combined. Like if I even use the word crypto to like a mom in the middle states in the United States.
Oh yeah.
What the F are you talking about? Like
this,
this doesn't sound right, and I don't know what you're talking about. So we use the word points, right? Because they understand that. So the magic happens when you take the vocabulary and the kind of state of the world understanding that they have by bringing it into crypto without all of the crypto jargon.
Yeah.
Without all of the crypto rails, without all the complications of wallets and stuff like this. And so I think we're going to be one of the first, maybe the first Web 2 company that has scale that brings normies to crypto in a way that is digestible to them. And that is actually like really, really exciting. And it does not dilute the offering of the product, which is ultimately our ikigai, right? Like what we're good at, what the world needs, what they pay us for is deals. Like ultimately we can use this token to lubricate how good your deals are as well. So I think it's like really, really exciting, and it's still like very early days.
So does how it work is like this some sort of agent LLM goes and scrapes the internet for what you're searching for and just effectively runs a massive comparison of like similar or same items at scale and then presents you like the best options basically.
Nailed it. Yeah. So we like to use the word generative marketplace. We generate a marketplace for every time you run a deal search on Dupe, you tell us what you want. So we have a URL hack. Any product page that you're on the internet, if you just type dupe.com/ in front of that product URL, we instantly generate a deal page that is unique to you. That's your deal page based on what you're looking for. So we have like millions and tens of millions of these pages at this point where people are telling us what they want, but they are also telling us, I'm willing to pay less if you can help me find something for less, right? And that is the job to be done of the product. And we use agents. We ingest feeds. There's LLMs involved. We're actually redoing the entire input box right now, which is a very simple input box where we're going to allow much larger context awareness so that we can make our results even better. We're working through that right now.
So when you're looking at the other kind of like the other landscape of these kind of companies on Believe and these types of ecosystem, what other projects have you found compelling? Like what other companies have been exciting for you that you've used? Is there any that have stood out more than others?
Yeah, there are. First of all, I'm very impressed with founders who take their time to understand the legal landmines, because there are some,
of course,
and it's very easy to run headfirst into the crypto market and bull post the hell out of your project and like get people excited to buy your coin. I think it's a big mistake to operate in that way. I think you really need to understand what you can and can't say, how often you can say it, what you can offer, how you can market, and importantly, what not to say, what not to offer, how not to market, right? And so we did a lot of that legwork up front, and the founders that I think are doing like a great job of this. Some of them are much smaller. You haven't heard of them yet because they haven't launched their product. Like 𝘗𝘗𝘁 is one that comes to mind. Another that comes to mind that is actually like fairly large, but doesn't yet have the mind share in ICM that, in my opinion, they deserve is Bitcoin. Like these guys have gone viral on socials, and that is really hard to do, to go organically viral. They have like 100,000 users or more even. They have real usage of their product. I'm very impressed by them because they do the harder thing, which is not to bull post all day, but to actually get users to use your product a lot. To make a sticky product is very hard, and to market it the right way organically is very hard. And these guys have shown time and time again that they are really good at it. So I'm very excited about that project as well. And there's a few others, but like those are the two that come to mind.
Yeah. One thing that I'd like to get your take on is from that the KLED founder went viral with posting that VC email. Do you think that was fake, or do you think that was real?
I don't know. I mean, his investors said that it was real.
I saw that.
And so I would believe that it's real. I think it would be really stupid to post like a fake email in that way.
It's not illegal.
I actually don't know that right. The question is like whether it's illegal or not. I don't know if it's illegal, but the question is that good form? It's great to get eyeballs, right? So just to give you an example, like we've had acquisition offers multiple times.
From who?
I'm not going to tell you that, but these are companies that you would know, and they're massive, $100 billion companies that you would know.
Amazon, Temu, Shopify.
Very quickly put out an email that shows me like telling them not interested, right? And that's going to get them millions and millions of views. But is that good form? I think you have to be very careful about how you say, what you say, when you say, and who you include in these posts. You don't want to burn bridges. You don't want people to feel stupid. You never know when you want people, these investors, these companies back in your fray. And by burning that bridge, that's a one-way door. They don't forget. And so be careful about that stuff. But clearly that founder is like very good at bull posting himself, his product, and some of the activity around it. So like, I get it. but also I don't know that I entirely agree with it.
Mm. All right, last one for you. When it comes to the innovation in the AI space, what has been some of the biggest bottlenecks for building Dupe? Like, let's say you're iterating on these generative marketplaces and you're trying to solve a problem that perhaps it's a perhaps it's a consistently failing to sort of like request or getting wrong answers. Like when dealing directly with programming the LLMs or just like the AI tools, what have been the challenges that you've seen face the most when building this product, specifically with regard to like the AI side of things? Perhaps because it's like too early in its development or needs better training, et cetera. Just generally curious as what you've been struggling with.
It's a good question. So like there's certain like context awareness that we need for products to be able to understand which products belong in which deal pages. I'd say we get it like right 95% of the time. That last 5% is probably like tens or maybe even hundreds of millions of dollars of CapEx involved in training. It's easy to like have a lot of context awareness if you don't care about the unit economics, but if you care about the unit economics and you're trying to get the highest level of context for the end customer, right? Like that's the challenge. Like it's very expensive to train a model, very, very expensive, because you need a lot of data, you need a lot of engineering focus, and you need time, and those things cost money. And so our challenge is always, the push and pull is like we're well funded, but do we want to burn all our capital on growing? Is our product good enough to grow as is, or do we think we need to solve that last 5% and expend $5 or $6 million training, ingesting feeds, training these models, etc., in order to grow? And so that's always the tension. Like we want our results to be better.
Yeah,
we are very unit economics conscious. For example, when we spend marketing dollars, our payback period is the same day.
Right.
Like the CAC payback in 1 day or less than 1 day is like
it's pretty insane.
It's insane. But that is how we operate. We are conservative when it comes to stuff like this. But now that we've raised more capital, so we will be burning more cash on marketing. We're doing things like podcast ads and stuff like this. It will increase the payback period. But am I comfortable being in a 6-month payback period? Like I'll tell you right now, I'm not. Because I don't know what's going to happen in the market in 6 months from now. And like making a bet and growing my operating expenses right now for a payback 6 months from now is like a very big question mark. So for me, I like to find ways to market, the barbell marketing approach, which is paid and organic. So I turn up our paid when our organic is on fire.
It
Does that
does.
make sense? Because then I can turn up my paid. And if the organic's not on
then
fire,
there's no need. Yeah, there's no need to spend.
To solve this, and then I go to paid. Now, that's not always the right answer. Sometimes it just pays to get attention fast because you've got a lot of competitors in the fray, but we have certain moats, not least of which is our brand, which, Dupe.com is a very memorable, very powerful brand. And for us, investing in that brand, doing it organically, making this work, and then cranking the engine on the paid side makes more sense. So that's how we like to operate, at least right now.
Bobby, I appreciate it, man. Thanks for your time. Thanks for the insights. Just the raw honesty in the middle of Soho House on a hotspot on a DJ stand.
DJ stand. Let me show you this room, guys. Look, come on. Literally, I'm in a box with a DJ stand. I don't know what to do with this, but I might have to spin some music.
All right, Bobby, be easy, man. I appreciate you. See you soon.
Thank you, guys.
All righty. Peace. All right, guys. Good stream today. There's a fun lot going on. It's literally like storming and lightning out here. Bobby's internet crashed. Batteries are running low across the board. Fun one though. I enjoyed the format. I enjoyed the overall feeling and just each of the guests. Looking forward to having Rob back as well. It's definitely going to make the show a bit more dynamic and a bit less kind of mental for me. So, guys, thanks for coming back, and we'll see you on Monday. Have a great weekend. Peace.